Hello everyone. Welcome to the virtual class of investment accounting. In previous sessions, I have discussed full-length practical problems related to the chapter. I have included method of valuation of the closing stock, FIFO, and in last lecture, I have discussed last in, first out LIFO method. Today, in this session, I would like to discuss evaluation of stock using LIFO method. Let us discuss the question first. From the following information provided by Shri Manan, prepare 9% bond account for the year ended on 31st March 2019. Opening balance is given at cost price rupees 3,67,500, while at face value it is rupees 3,75,000. There are 4 different transactions available to us in the table. On 1st May, we have purchased for rupees 1,50,000 at the rate of 96, and it is cum-interest purchase. On 1st June, we have sold for rupees 75,000 at the rate of rupees 98, and it is ex-interest sell. 1st September 2018, we have sold for rupees 75,000 at the rate of rupees 102, and it is a cum-interest sell. And a last transaction given in the table as on 16th December 2018. We have purchased for rupees 90,000 and it is ex-interest purchase. Date of payment of interest. You can say it is a notified date of the interest payment, June 30 and December 31st. As per the information, brokerage at the rate of 1% on face value is applicable. It is clearly written over here that the brokerage is applicable on face value of the transaction, and it is applicable on each purchase and sell. So the rate of brokerage is flat. It's a 1% for every transaction. The investor is following LIFO method for the valuation of closing balance or closing stock. Clear-cut information is given related to valuation of stock. Let us move to the solution of the problem. As you all know, before starting calculation, it is necessary for you to understand a few basic things. The first and foremost item, that is the accounting year. Our accounting year starts on 1st April 2018 and ending on 31st March 2019, because we need to prepare our account for the year 2018-19. Interest received on June 30, 2018, very first time during the year, and second time on 31st December 2018. So, we have to receive interest 2 times in the year, that is twice, and for the period of 6 months each. Last date of payment before 1st April 2018, this is 1st April 2018. We are in receipt of the interest twice in the year, June 30 and December 31st. So if you follow the same order, the last receipt date is 31st December 2017. Calculation of this date is the most important, because on the basis of this calculation we have to decide the accrued interest on opening balance. And accrued interest on opening balance is for the period of 3 months. With this understanding, we can start our sequence. Let us prepare the sequence first. 1st April 2018, very first day of the accounting year, and as per the information, we are owner of the security worth rupees 3,75,000. So on 1st April 2018, if we are holding securities worth rupees 3,75,000, the interest is accrued for the period of 3 months because last date of payment was 31st December 2017. So January, February and March in full, 3 months. Then we have one more transaction. On 1st May 2018, we have purchased the security worth rupees 1,50,000 and the period of interest calculation is 4 months because last payment date is 31st December. So January, February, March, April in full. Then we have sold security worth rupees 75,000 on 1st June. The period of interest calculation involved in this transaction 5 months: January, February, March, April, May, and transaction executed on 1st June. So we will consider up to May 31st. Then June 30, 2018. This is the date of interest received on the securities holding on June 30. We had a security worth rupees 3,75,000 in opening. Plus we have purchased for rupees 1,50,000 minus we have sold securities worth rupees 75,000. So on the date of interest, we are holding securities worth rupees 4,50,000. And the period involved in the calculation is 6 months from 31st December 2017 to June 30, 2018. Now, last interest payment date is June 30, 2018. So our next transactions are working from this date. 1/9/2018. We have sold our securities for rupees 75,000. The period involved in the calculation is 2 months because now last payment date is June 30. So July and August. 16th December 2018. Purchase for rupees 90,000. Period involved July, August, September, October, November. 5 months in full and December 16. So half of the month of December. So period involved in the calculation is 5.5 months. Then December 31st. Second time we have received interest during the year. We need to calculate the amount of securities holding on 31st December 2018. On June 2018, we had securities worth rupees 4,50,000. Minus we have sold for rupees 75,000 and we have purchased for rupees 90,000. So 4,50,000 minus 75,000 plus 90,000 equals to 4,65,000. After December 31st, there is no transaction related to purchase and sell. But as per the protocols of accounting, we need to wind up our account. We need to close our account. So on the last day of our accounting year, 31st March 2019, we need to evaluate closing stock using last in first out LIFO method, and we need to calculate accrued interest on closing balance, that is rupees 4,65,000. Number 1, accrued interest on opening balance. Number 2, purchase on 1st May. Number 3, sell on 1st June. Number 4, interest received on June 30. Number 5, sell on 1st September. Number 6, purchase on 16th December. 7, interest received on December 31st. 8, valuation of closing stock and accrued interest on closing balance. So, after defining the sequence of the transaction, let us move to the calculation one by one. The first transaction is accrued interest on opening balance. Face value of the securities, 1st April 2018, rupees 3,75,000. Period involved in this calculation is 3 months. So amount of interest accrued, I equals to PRN upon 100. I 3,75,000. Rate of interest 9% as given in the question, and period involved in our calculation is 3 months. So amount of accrued interest is 8,437.5. Let us enter this transaction in the ledger. 1st April 2018, opening balance, face value 3,75,000, ready-made given to us, and cost price 3,67,500. In the blue color, we have inserted figure of accrued interest on opening balance. So in this way, we need to start our investment accounting with all 3 items: opening balance at face value, opening balance at cost price, and accrued interest on opening balance if it is applicable. Now move to transaction number 2. It is all about purchase on 1st May 2018. Face value of the transaction is rupees 1,50,000. Market rate rupees 96, cum-interest. Brokerage at the rate of 1% on face value, and period involved in the calculation is 4 months. As you all know how to calculate the things, so I don't want to discuss calculation of total amount paid for purchase and capital cost in detail. From your calculation, you can derive 2 different amounts that we need to pass our journal entry. One, it's a capital cost 1,41,000, and another is total amount paid for purchase 1,45,500, and amount of the interest involved in this calculation 4,500. So once you calculate all these items very properly, simply pass journal entries in the books of account. 9% bonds account debited, or you can say it is investment account debited. It is debited at a cost price 1,41,000. Interest account debited 4,500 to bank account 1,45,500. Let us enter this transaction in the books. Debit side of investment account, 1st May to bank account, face value 1,50,000, amount of interest involved in this calculation 4,500, and cost price as per our calculation 1,41,000. Enter the transaction on debit side. Bank account 1,50,000 at face value, amount of interest 4,500, and cost price 1,41,000. After discussion of transaction number 2, let us move to transaction number 3. It is all about calculation of sell on 1st June 2018. Let us collect the details first from our question. Face value 75,000, market rate at the rate of rupees 98, x interest. Brokerage as per the information given, 1% on face value, and period involved in this calculation 5 months. How to calculate the cost price, amount of interest and total amount received in case of sale, that you know better, so I don't want to discuss these things in detail. So without wasting much time, we have to focus on three items. Capital cost 72,750, amount of interest involved 2,812.5 and the total amount received 75,562.5. Journal entry: bank account debited, total amount received 75,562.5. 2. Investment account, it is credited at cost price 72,750 as per our calculation. And to interest account 2,812.5. Now enter this transaction into ledger. Credit side of the investment account, by bank account 75,000 rupees of face value, interest involved in this calculation 2,812.5 and cost price is rupees 72,750. Let us move to transaction number 4. Interest received on June 30, 2018. Face value of the securities held on June 30, 4,50,000 as per our calculation that we have decided at the time of defining the sequence of the transaction. Period involved in the calculation 6 months. Amount of interest received I equals to PRN upon 100 and the result is 20,250. Let us pass journal entry for the interest received. Bank account debited to interest account 20,250 rupees. Let us enter this transaction in our ledger. Credit side of investment account. June 30 by bank account 20,250. It is a transaction of interest. So we need to enter only amount of interest in interest column. Then move again, just check for your reference. Then move to number 5. Sell on 1/9/2018. Face value rupees 75,000. Market rate 102. Cum-interest. Brokerage at the rate of 1% on face value. And a period involved in the calculation is 2 months. We know better how to calculate in case of cum-interest sale. Capital cost of the transaction 74,625. Interest involved in this calculation for the period of 2 months at the rate of 9%, 1,125. So total amount received as per our calculation as the transaction is cum-interest sale 75,750. Let us pass a journal entry in the books of account. Bank account debited 75,750 to 9% bonds or investment account 74,625 to interest account 1,125. These transactions are prototype transactions. Once you calculate properly, rest of all other transactions are moving on the same direction of calculation. Let us enter in the ledger. 1/9 by bank account 75,000 rupees of face value of the transaction 1,125 is the amount of interest included in the calculation and cost price as per our calculation, you can check 74,625. Now move to next transaction. It is related to purchase on 16th December. Face value 90,000. Market rate 101 x interest. Brokerage at the rate of 1% on face value. Period involved in the calculation 5.5 months. We have collected all required information related to calculation of purchase, and you know better how to calculate the same. After calculation, you can derive the figure of capital cost rupees 91,800 and a total amount paid including interest as the transaction is X interest 1,01,512.5. Let us pass journal entry in the books of account. 16th December 2018, 9% bonds account debited 91,800. It is cost price of the security. Interest debited by 3,712.5 to bank account 1,01,512.5, that is amount of payment. Let us enter the transaction in the ledger. 16th December, debit side to bank account, face value of the transaction 90,000, interest involved in the calculation 3,712.5, and capital cost is 91,800. Now, 7th and next transaction. It is all about notified date of interest received. On this date, we are holding securities worth rupees 4,65,000. Period involved in the calculation is 6 months. So amount of interest received, I equals to PRN upon 100. Principal amount 4,65,000. Rate of interest 9%, and a period involved in the calculation is 6 months. So the amount of interest received on 31st December 2018 comes to rupees 20,925. Journal entry: bank account debited rupees 20,925 to interest account 20,925. Enter the transaction in the ledger. Credit side 31st December by bank account 20,925. Now number 8. As there is no transaction between 31st December and 31st March, we need to ending our accounting. And for the purpose of ending our accounting, we need to calculate two important items. First, it is related to calculation of accrued interest on closing balance. As per our calculation, on last day of accounting year, that is 31st March 2019, we are holding securities worth rupees 4,65,000. Period involved 3 months. Calculation starts from December 31st. So January, February and March, 3 months. So amount of interest accrued 4,65,000, period involved 3 months, and the rate of interest is 9%. So in this way, we can calculate amount of interest accrued 10,462.5. Journal entry: accrued interest or interest receivable account debited 10,462.5 to interest account 10,462.5. Let us enter this item in the ledger of the company. On the credit side of investment account, date 31st March, by interest receivable account, and amount of interest receivable is 10,462.5. Now, moving to the last and most important item of this solution. This is all about evaluation of closing stock using LIFO method. As you all know that we need to calculate closing stock either FIFO method or LIFO method. But we are using LIFO method only in the case when it is clearly instructed. And in this question, clear-cut instruction is given to us. So we need to calculate closing stock at face value first using LIFO method. Then we will calculate at cost price. Let us start our calculation at face value. I have given some code ABC for the purchase and opening stock in order to identify the stock very easily. A. On 1st April 2018, we are holding securities worth rupees 3,75,000. So the stock is A, 3,75,000. Then we have purchased one more security and we have given code to this security as a B for the purpose of our easy identification. This is B for rupees 1,50,000. Now we are holding two different varieties of investment in our stock. Then on 1st June 2018, we have sold securities worth rupees 75,000. Don't forget that we are following LIFO, last in first out method. So from this A 375 and B 150, this is our last in, or you can say last entry of investment. So out of this last entry, we need to sell for 75,000. So the closing stock A 375, no change, so 375 as it is. B 1,50,000. Out of this 1,50,000, we have sold for 75,000. So 1,50,000 minus 75,000 equals to 75,000. Then 1,92,018, we have sold securities worth rupees 75,000. Again, you can check A 375 and B 75. We are using last in first out, so this is called last in. Out of this last in, we have sold security worth rupees 75,000. So closing stock 375, no change, so 375 as it is. 75,000 that we have sold for, so no securities from lot B. Then we have purchased the security of rupees 90,000 on 16th December. So position of stock 375A and 90,000 B. So in this way, total investment available to us at the end of the year at face value 4 rupees 4,65,000. 4,65,000 is nothing more than total of these two items available at the end of the year. 3,75,000 plus 90,000. Now move to last part of our calculation, and it is all about valuation of stock. A, that is opening balance. Face value 3,75,000 ready-made given to us. Cost price 3,67,500 ready-made given to us. As we all know that we are not selling anything out of the closing stock because everything remain same. So the stock of rupees 3,75,000 which was available to us in opening remains same. So simply cross multiplication when face value is 375, cost is 367,500. So for 375 how much? And the result is 3,67,500 that we have mentioned over here. Clear? Now B. There is no stock from B because we have already sold everything from purchase B. And for C, 90,000. Everything is available to us in the stock. Otherwise, we need to use cross multiplication in order to calculate. But here, entire amount of purchase is available in the stock that we can calculate from here. Face value 90,000 and cost price is rupees 91,800. So when face value is 90,000, cost price is 91,800 and nothing is sold out of this. So 90,000 out of 90,000 is available to us in closing stock. So cost of which is 91,800. So total stock at cost price 4,59,300. Record cost price or market value, whichever is less in the books of account. But in this question, information related to market value is not given. So we need to evaluate stock at its cost price. That is rupees 4,59,300. Let us enter this detail in the ledger. 31st March 2019. Buy balance, face value 4,65,000 and cost price as per our calculation. So the value of closing stock at cost price is rupees 4,59,300 that we have completed in our calculation. And for the purpose of just cross verification, you can check it. We have completed our calculation over here and the result was 4,59,300. Now close the account. Face value total 6,15,000 on both the side. Total of the interest column 55,575 and the amount of difference rupees 38,925 transferred to interest and dividend account on 31st March. Whereas in the column of cost, total of the credit side is higher 6,06,675 and the amount of difference rupees 6,375 is referred to as profit and this profit is transferred to profit and loss account. So in this way you can prepare your investment account using last in first out method. I hope everybody is clear with the solution of the problem. Keep watching next sessions. Thank you. God bless you. Keep learning. Keep growing.